All right, this is Demo Gonzalez from Heartwood Financial Services. Hey, welcome to our latest financial education video. And today we have a big announcement. The SEC has approved 11 spot Bitcoin ETFs. Now you might be saying, well, didn't they already approve some Bitcoin ETFs? Well, those were Bitcoin futures. Okay, they were ETFs based on the futures. These are the actual spot price ETFs. So we're going to talk about what the difference of those are, how do they work, and what are the ramifications to the industry and to Bitcoin prices. So let's get started. Now, of course, before we get too far along in this video, let's throw out the disclaimer. Bitcoin is a very volatile asset. It's not right for everybody. And by me making this video, it doesn't mean that I'm promoting it or endorsing it by any means. I just wanted to put it out there for education because it was a pretty big announcement that came out here recently. Now, first of all, I would describe this as a reluctant approval by the SEC. You see, they approved the futures-based ETFs for Bitcoin about a year ago, but they didn't approve the ones for the spot prices. And so they were talking about how there was still a lot of fraud and manipulation in the system. And what's interesting is one of the big money managers actually sued the SEC saying, well, why did you approve futures ETFs and not the spot ETFs? The same problems that you're concerned about would affect the futures prices as well. And so it seemed a little bit hypocritical they approved one and not the other. And recently, they actually lost. Can you believe it? The SEC actually lost this lawsuit and had to revisit again the applications of these Bitcoin spot ETFs, and that's what manifested into this recent announcement that they have approved it. Now, of course, the SEC is going to say they don't endorse the Bitcoin ETFs, and in fact, what's interesting is by the SEC approving a product to be traded, it's never an endorsement. It's always just saying, hey, they're following the rules and the guidelines that we've had in place, and they've answered the questions and concerns that we've had. And so that's essentially all it means. It's never an endorsement. All right, so let's start off with what are Bitcoin ETFs? Well, first of all, they actually own the Bitcoin itself. And so this is what makes it different from a futures-based ETF, where they're just trading a derivative product. This is actually an ETF that buys the Bitcoin and stores it with a custodian like Coinbase. And Coinbase stores the Bitcoin in cold storage, which means it's not on the internet, it's not available to trade around or anything like that. It's in cold storage. Kind of like a vault. Kind of like a vault where you would put gold. So it's similar to that. Okay, the second feature of the Bitcoin spot ETF is that it's going to have more accurate pricing based on the actual underlying Bitcoin prices. In the derivative products, they were trading based on the futures, and that's completely different than the actual price of, in this case, Bitcoin. And so that's definitely an advantage there. The last thing I would say is that the ease of buying Bitcoin now has dramatically improved, because now you can buy this ETF inside of a brokerage account. You don't need a wallet. You don't need to have personal keys and know how to store it properly or anything like that. It takes the technical know-how way down, and you can just buy it in a brokerage account that you already have. So this is going to help bring it more mainstream. All right, so how do these ETFs work? Well, we can get kind of wonky here. So I think the easiest way is just to give you an example of something that's very similar. So we have the GLD and the SLV. These are very popular ETFs that are out there now for gold and silver, and they trade on the traditional stock exchanges. And when you buy these ETFs, you're not actually going out there and buying gold and they're delivering it to you or anything like that. the ETF buys the gold on your behalf, and then they custody it, put it in a vault somewhere safe, and then they issue you shares of the ETF that represent portions of that gold or that silver. And that's the exact same thing that's happening with this Bitcoin spot ETF. So they own it in cold storage, and you have shares that represent a portion of it. So again, that's what makes it very different from the futures, is they never actually own the Bitcoin itself. All right, so now let's talk about what does this mean and what kind of impact is this going to have to the crypto industry and to Bitcoin. Well, as you can see by my explanation of how it works, I think it's going to increase investor demand for Bitcoin. It's just easier to access Bitcoin. It can be used in existing accounts that you already have. And now it seems to be that there's more regulation and compliance over these instruments versus these, exchanges that were kind of like the Wild West. So the investor demand there, I think, is probably going to be higher. Now, what does that mean for crypto prices? I mean, it's definitely a good sign. That could mean that Bitcoin prices could go up. Of course, nobody knows this, and Bitcoin is such a wild asset class. It could definitely be way down. In fact, it's been down since the release. It's been down quite a bit, but it went up a lot prior to that. So I wouldn't expect this to be the golden ticket. If anything, there's going to be continued volatility, but the interest level has definitely gone up. All right, so I want to leave you with one last chart, and this is a chart that shows the price of gold going back to 1979 through 2023. And you can see that for the first few decades here, gold was up and down, went up a little bit through the 70s, mostly a little bit in the 80s and 90s. But right around here, November of 2004, that's when the first gold ETF was approved by the SEC, and it was listed on the New York Stock Exchange and started to trade. And you can see here that proportionately, it appears like it went up a lot more. Now, there's a lot of other things going on here. We had 2008. We had a lot of money printing after 2008, so there was a huge spike that you can attribute to some of those things. And of course, it's not just the ETF, but you do have to wonder if there was a correlation there of just making it easier to trade, easier to own. You can buy it in IRA accounts and non-IRA accounts, that it just increased the demand for the gold. And so the idea that I want to present here is that maybe that could happen with Bitcoin too. Obviously, I don't know, and I'm not trying to predict that that's what's going to happen. I just want to show you some historical parallels so that you can see and make that decision up on your own. All right. So I hope this was helpful, guys. I know this is a very controversial topic. There's still a lot of what ifs and speculation going on in this industry with Bitcoin, and there's still a lot of shady stuff too. So as hopefully that stuff starts getting worked out and it becomes more regulated and more legitimate. So it's definitely something that you have to be very much cautious, buyer beware about. But with the ETFs coming out, it's definitely opening up the door for a lot of things, and certainly something that you should educate yourself about, which is what I'm trying to do here. So if you have any other questions, please feel free to reach out to me. Happy to help you as best as I can. Obviously, I won't have all the answers, but we can hopefully point you in the right direction. But hope this was helpful. Thanks again for watching, and God bless.